including his treatise on money, 1930s. He published it in 1931. He has a paper in which he says capitalism has two major evils. One is that it is incapable of producing full employment. Second is that it creates huge income redistribution problem. And then he says the villain of the piece is interest rate debt system. Now, if you look across the last since 2012, you have at least 10 articles by major financial experts that have written about the evils of debt, interest rate-based debt. And some of them are claiming that this system is has already hit the wall, and that it is no longer possible for capitalism to rely on interest rate-based debt system. So therefore, what we hope that if any real Islamic finance eventually comes into being, it would try to reduce at least both poverty, income redistribution, and allow people by true inclusion to build wealth in order to hedge their idiosyncratic risks. Now, this is the way Islamic finance would ensure inclusion, and it would also include, allow poverty to be at least reduced, if not totally eliminated. Thank you.
Thank you so much. Let's continue with our academics first. So I'm going to request Professor Jan Brouw to please give his views on how Islamic finance provides a different or better answer on sharing prosperity and enhancing inclusion. Sure, please.
بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة والسلام على سيدنا أشرف الأنبياء والمرسلين وعلى أصحابه وآله المطهرين أجمعين أما بعد. Sisters and brothers, Assalamu alaikum wa rahmatullahi wa barakatuh. First of all, I should thank the chairman of this station, and I have to thank the organizers of this forum for inviting me as a speaker. Indeed, it is an opportunity for me to learn from the scholars and expertise, especially from Prof. Dr. Abbas Mirahura and Dr. Zamir Abbas, since I know them several years ago. I was a visiting associate professor in INSEF 2012. Thus, I'm the learner today rather than the speaker. Now, before we are entering into the discussion on the topic, Islamic financial inclusions or institutions working towards financial inclusion and shared prosperity, I would like to refer a paper to you all, Risk Sharing and the Shared Responsibility in Islamic Finance, written by Prof. Abbas and another co-author, Nabil, published in Islamic Economics Studies, Volume 23, number 2, November 2015. So, of course, I'm not going to criticize this paper, since I have no enough knowledge related to the topic to do criticism. As well as I stated that I'm a learner today, rather a speaker. Besides, I'm one of the supporters of the risk-sharing modes of Islamic finance. Why? Because it is approach or a mode fulfills the objectives of Sharia or maqasid al-Sharia, which, as our ulama have emphasized, enlightened through the history of Islamic jurisprudence, like Imam Ghazali, Imam Shatibi, Imam Ibn Ashur, and others. In the mentioned paper, Prof. Abbas points out risk sharing is an effective method of expanding participation of agents in economic growth and development, and the more effective sharing of the fruits of prosperity than risk transfer that currently dominates the financial system, including Islamic financial institutions. That's why a group of leading scholars, Sharia scholars, and the Muslim economists considers the risk sharing as the essence of Islamic finance. This point mentioned in the first day of the keynotes by Prof. Abbas. So a test of which is its ability to promote financial inclusion and asset building capacity of poor, and thus better sharing of the prosperity. The mobilization of financial resources toward productive activity, economic justice, and the social participation in an effective manner. Maintain justice in every aspect of our daily life is the order, command, and instruction which the Holy Quran states. Allah subhanahu wa ta'ala says, أعوذ بالله من الشيطان الرجيم إن الله يأمر بالعدل والإحسان وإيتاء ذي القربى وينهى عن الفحشاء والمنكر والبغي يعظكم لعلكم تذكرون. Surah An-Nahl, ayah 90. So this ayah means Allah commands justice, the doing of good deeds, doing good, and the liberty of kith and the kin, and He forbids all shameful deeds and injustice and rebellion. He instructs you, so believers, you may receive the lessons from Allah subhanahu wa ta'ala, or even from the current crisis that occurred in the finance system. In another ayah, we may refer here, يا أيها الذين آمنوا كونوا قوامين شهداء لله شهداء بالقسط ولا يجرمن شنآن قوم على ألا تعدلوا يعدلوا هو أقرب للتقوى واتقوا الله إن الله خبير بما تعلمون. Surah Al-Ma'idah, ayah 3. So this ayah gives us an idea. We keep or maintain justice not only for Muslims but for non-Muslims too. So we share the prosperity as non-Muslims proposed to us. There is a strategy proposed by our president, Mr. Xi Jinping, in 2013, One Belt, One Road strategy. His intention and our intention as well is to share the prosperity of economy in the world. So non-Muslims and the Muslims can share together the prosperity, but we have to show as Muslims, our essence of Islamic finance, or essence of economy, which is justice, and I refer to justice here is risk sharing. The meaning of this ayah, all you who believe, stand out firmly for Allah subhanahu wa ta'ala as witness to be with or let not the hatred of others to you to make you keep away from the justice. So be justice. You don't depart justice. Here is my explanation. Accordingly, this paper attempt to demonstrate that the risk-sharing method or modes of finance real investment in the public and the private sector reduce the poverty. And the real investment conduce a more effective channels of saving towards development of finance in the world. So I got many papers, many things would like to share with you, but since the 1 minute is left to me, I share with you two news. One news I mentioned before, it's good news that a One Belt, One Road strategy proposed by China government and started with the Pakistani government. As we know, it's a China-Pakistan economic corridor. And we have opportunity and the potential to introduce Islamic finance through this channel, inshallah. Another, or the second good news, just yesterday, the local Hui Autonomous or Ningxia Hui Autonomous region as a request me to write a proposal that's related to the cooperation between China and the One Belt, One Road, and road countries. So many Muslim countries we are cooperative with China. So this is another opportunity that I have to share with you. And I submitted the proposal to the government last night, and alhamdulillah, it was accepted by them. What is my topic of proposal is risk sharing as a mode of cooperation between China and One Belt, One Road in road countries. So the last, but not least, alhamdulillah, اللهم اجعل هذا بلدا آمنا ورزق أهله من الثمرات رزقا لهم. So to conclude my speech here, Mahabbati Pakistan. Thank you very much.
Thank you so much. So I think after listening to these first two thoughts from first two scholars, there's no doubt in our mind that Islamic finance and Islam itself offers a very comprehensive framework which should lead to better inclusion and better and more enhanced shared prosperity. So I think let's move to more real world coming out of academics, and let's go to the policy makers. So here we have one of the very leaders who has taken a lead in terms of financial inclusion. We have Mr. Samar Hasnan, who's Executive Director, Development Finance Group at State Bank of Pakistan, and I had a pleasure of working with him when they were trying to develop a national strategy for financial inclusion. So I'm keen to hear from him that what are the public kind of policy perspective on achieving these objectives and how Islamic finance comes into play with it.
First of all, I would like to thank the organizers of this forum. The subject that we are discussing right now is something which is very close to the heart of the central bank, financial inclusion and Islamic banking. And let me say it upfront that on the motion that our Islamic financial institutions working toward financial inclusion and shared prosperity, I reluctantly will be arguing against this motion. And I have reasons to say that, and since I'll be building up an argument on that, so I'll have to refer back to my papers again and again. So I apologize for that. Upfront financial inclusion, Dr. Abbas has mentioned that from a different angle. Access to finance is not all about financial inclusion. It's also the use. And it's not limited to the use only. It's also the efficiency. And it's not that the only Pakistani central bank is working for financial inclusion. More than 100 central banks across the world, they're working on financial inclusion aspect. Now, this financial inclusion in Islamic banking has again been touched in early two speeches, but I'll try to touch very quickly on that from a different angle.
Islamic financial institutions have been set up for three, and they have got three characteristics. First, that they attract those who have faith-based exclusion from the financial system. Secondly, the system is primarily asset-based, so it ensures financial stability. And the third characteristic of Islamic financial institution is the risk sharing that we heard earlier. Now all these three characteristics then combine into an objective which is inclusive financial growth, which ultimately leads to the poverty alleviation. So the ultimate objective comes to the poverty alleviation. This was all about Islamic banking. Now the financial inclusion, if you look at the ultimate targets of the financial inclusion, then again through a complete route it goes back to inclusive financial growth and poverty alleviation. So on these ultimate objectives, Islamic banking and financial inclusions, they converge together. Now when I said that I reluctantly move against this motion, the reason is that Islamic banking industry presently in Pakistan is not actively serving financial needs of some of the real sectors. They have Islamic banking, by virtue of their nature, have an inherent advantage of funding to the real sectors, which are agriculture, SME, micro, low-cost housing, and some of the infrastructure projects. One could always argue that when I use the word is not actively serving, what should be the right adjective? Should it be less actively, passively, or not at all? So one can always argue on that. Now, why did I say that? Because if you look at the figures of the Islamic banking industry, and if we try to compare that, the sort of funding and the financing that Islamic banking industry is providing to these particular sector vis-a-vis industry averages, then we look at against an industry average of 5.6% financing out of the total private sector credit to the SMEs. The share of Islamic banking is 2.8%, which is half of that. Though 5.6% itself is extremely low. But if you look at the agriculture sector where Islamic industry is providing financing, it comes to be extremely low. Against an average of industry of 6.8% financing being provided by the industry compared to the private sector credit, Islamic banking industry is providing 0.8%, less than 1%. What is the central bank doing in these two areas is looking at the situations. Central bank is now giving and allocating targets within the bigger targets to the Islamic financial institutions as well. We'll have to see as to how do these targets work. The third area, which is the microfinance institution, is slightly better compared to agriculture and SME. The institutions like Howard and Wasil Foundation, they're working pretty nice in promoting Islamic financing and providing financing to the real sectors that I mentioned. One of the report of the Pakistan Microfinance Network says that against 4 million borrowers of microfinance, approximately 13% are those who are from these sectors. Likewise, out of the total gross portfolio, 7% funding is going to these real sectors. Again, the central bank's role is to provide enabling regulatory environment to promote Islamic microfinance, and for that purpose we have set up the regulations in terms of which could be set up within the microfinance institutions. NRSP, of course, I would take their name, is doing pretty well in that area. If you look at even in terms of the number of branches of Islamic banking industry in Pakistan, then 78% of those branches are concentrated in two provinces, which is Punjab and Sindh. But more interestingly, 52% of the total branches of the Islamic banking industry is only in 5 major cities. So that shows how much concentration is in that, and one can always try to link it with financial inclusion, which is more and more needed in remote areas where the people do not have a normal access to the to the finance. The institution would not be very different even if we take the conventional banks branches network in that. But since we are talking about the Islamic industry here, so I'll be focusing more on that. One of the study which was conducted by State Bank of Pakistan was about this knowledge, attitude, and practices, and it clearly says that there is a huge demand from the market, both on the individual level and as well as on the corporate level for Islamic products. And it clearly mentions that there are people, there are individuals, and there are institutions who have opted for voluntary exclusion from the system because they do not have an access to finance to the Islamic banking. So it's an issue of perception as well. Of course, against my argument, and I'm sure that would come, one could always say that there are the costs involved into that. Yes, there are the costs involved, but then you have got the solution. You can take benefit of the technology. Branchless banking is working extremely nice in case of the conventional banks, and now some of the Islamic banking institutions have also started, so they can always capitalize on that. Research and development and human resource, again, is one of the area, and this center of excellence is working for that. The last point that I would like to mention is that access to finance survey, the latest one was conducted in 2015. The previous one was in 2008. That shows that there is a substantial movement in terms of improvement in terms of financial inclusion. But for example, I just give you a number that in 2008 it showed that 12% of the people have access to the formal financial sector. This 2015 survey says the number has increased to double to 23%. Likewise, 11% adult population have had their bank accounts in 2008. Now that has gone to 16%. Interestingly, in case of the women entrepreneurship, 11% women now have an access to the bank accounts compared to 2008, which was 4%. And this is precisely the reason that the National Financial Inclusion Strategy, Dr. You mentioned about that, that was set up in Pakistan. It was now it is being implemented. And one of the key themes of this National Financial Inclusion Strategy is that in case of all these priority sectors, agri, SME, micro, housing, especially low-cost housing, infrastructure, Islamic banking should be a cross-cutting theme across all of these sectors. So that's a point where the central bank efforts, along with all other stakeholders, converge on enhancing financial inclusion in that. And with that, I conclude that by saying that I close this debate from my part with the argument that Islamic financial institutions, they have been set up to promote financial inclusion, not only at individual level, but also at the agri, SME, low-cost housing, women entrepreneurship, and they were meant for shared prosperity. But the actual achievements have not been up to the mark. There are regulatory costs involved, but then there are regulatory solutions as well. There are other solutions as well, like the one I had mentioned about technology, innovation of products, efficiency, service level improvement. All are these factors which would help in reducing the cost and would allow the Islamic banking industry to have an access to the financial inclusion. Thank you.
Thank you, sir. I think I would like to add over here that Pakistan is one of those countries who has developed a national strategy for financial inclusion. Otherwise, many other countries do not have so which is, it's a very good thing. At least it shows that things are moving in the right direction. So we heard from the academics, we heard from the public policy perspective. Let's move to the private sector and hear from them that what are the constraints, so what are the challenges they face in implementing some of these demands, or at least which are come out of the, the whole objectives of Islamic finance. So I'll probably let me start with Mizan Bank. Arif, could you kindly give your perspective, and then we'll move on to your neighbors and so forth.
Certainly. Bismillah ar-Rahman ar-Rahim. I think I've been I've been asked a tough question or a tough proposition that Mr. Samar Hassan believes or feels that Islamic banks are not doing enough, but I do want to take just a few minutes to try and explain the history, if you like, of Islamic banking in Pakistan. which I'm sure is familiar to most people in this room. And of course, Dr. Ishrat just walked in, and I think we're grateful to Dr. Ishrat because he was, and I was privileged to be present at the time when he granted Mizan Bank the first Islamic banking license in this country. But having said that, the so-called Islamization of the banking system was actually initiated much earlier, in 1985. Um, and I remember that when Dr. Ishrat handed the license over, the first Islamic banking license to Mizan Bank, he said that there is a great responsibility that lies on the shoulders of Mizan Bank, because this is the second time that the Islamic banking experiment, so to speak, is being given an opportunity in this country. And therefore, the first time this was initiated, unfortunately, due to reasons that I don't have time to get into, in a sense, did injustice, I feel, to the subject of Islamic finance and Islamic banking, and therefore created a very negative environment and a negative perception about what Islamic banking is all about. So in 2002, when this license was granted to Mizan Bank, we were cognizant of this failed failed history or precedence, if you like. So our first challenge as a team was really to establish the credibility of Islamic finance and the credibility of Islamic banking in this country, and to give the consumer, to give the people of Pakistan a choice between two counters, the conventional counter and the Islamic counter. So while I agree with what has been said both by the scholars and by a regulator, that social justice and possibly the inequality of income or unequal distribution of wealth has not been fully addressed by Islamic banks. But my only response to that would be that it's a little early. I think we need a little bit more time. Our primary objective at Mizan Bank was really to ensure that we safeguard the interests of our depositors, of people who came to Mizan Bank, because they had faith that, number one, that what we were offering was truly a Sharia compliant product. That was first and foremost very important. So the credibility of the product was absolutely critical, and I'm grateful to our Sharia board and everyone in our Sharia team and our research team and everyone else at Mizan Bank who worked very hard to establish the Sharia credibility of our products, and at the same time to safeguard their interests. And by that I mean Samar Saab has pointed out that Islamic banks are not doing enough in the area of SME or on agriculture, but unfortunately the reality is that the non-performing ratio in these segments historically in Pakistan has been extremely high, in very high double digits, and we were cognizant of that, and therefore our primary objective was to ensure that we first set a very viable and stable base from which to build. Now, alhamdulillah, I think 14 years down the road, we are focusing on these areas much more aggressively, much more rigorously. Earlier this year, and I think Samar Saab, you were present at the launch ceremony of our branchless banking initiative, where we have teamed up with one of the leading telcos in Pakistan to launch our branchless banking initiative, and I think that will go a long way in promoting or helping Islamic banks address the subject of financial inclusion. At the same time, what we are pushing and we are focusing on building the requisite expertise because it's very important to make sure that when you enter a segment or when you enter a market or when you want to implement or introduce a product in these new segments. When I say new, because we were not active in them, it's very important for you to build the right expertise, and therefore we have worked hard to do that. We are now entering the SME segment. We have recently signed a joint venture agreement, in fact, with Karandaz to promote to promote this segment. Karandaz, for some of you may be familiar, is a DFID stroke World Bank sponsored initiative. So, so the point is that I think Islamic banks are have done relatively well in this country. If you look at the growth, it currently represents about 13% of the total banking industry. So in 14 years, the market share that the Islamic banks have captured from the conventional banks is, in my opinion, very good, which therefore now ensures that the timing and the base is there to enable the Islamic banks to really make a difference, to really take Islamic banking services and products to a hitherto untapped segment, if you like, of society, which did not have access to the financial institutions, or they chose, as Samar Saab pointed out, that a study shows that a lot of people choose to stay away because of riba. So I feel that the future, inshallah, for the Islamic banks is bright. I think Islamic banks have shown that they can operate profitably, and that they can develop the full range of products and services that are required to cater to all segments, be it SME, agriculture, or even the larger segments of our corporate banking.
Thank you so much. So let's move on to, please.
Bismillahirrahmanirrahim. I'll take forward what Samar Saab and Arif Saab said. To my humble opinion, this market share of 13% and doing Islamic banking, what we are doing in the market for the last 13, 14 years since 2002, quite frankly, to my mind, it's not the market share or the balance sheet footing of the Islamic banking. 13% to my mind is misleading. How many customers they have come to Islamic banking, it's more important to me. And they may be 5, 6, 7% of the total number of accounts in the industry. As Samar Saab said, that it's already very low. I think if we talk about going to individuals and booking of assets, our 70% asset of the industry in Islamic banking are corporate assets, and quite frankly, very few corporates are of Islamic mindset. They're mostly looking for cheaper finance. So we need to really work as Islamic banking industry for the small enterprises, for the medium enterprises. We must look for individuals, consumer finance, agri-finance, and microfinance. Islamic banks are so far shying away from microfinance. There is hardly any considerable leasing company who work with the small enterprises and individuals. So there is need to do a lot more. It's responsibility for all Islamic banks and Islamic bankers to really come up with the solutions and with the more open heart. Now regulators are there. Sharia ulama, they are mashallah trained. 13, 14 years back, there was a huge gap. Sharia ulama, they were not having the practical experience, and bankers like us, we were not having any knowledge of the Sharia. So that gap is now narrowed down. So I think that the platform is set for us to really strike to those areas where we can really approach a large and masses. And my next point would be about the social capital. I think with all the people they are involved so far, my feeling is, alhamdulillah, about 90% of the people, or maybe more, they are working for Islamic banking and Islamic finance with the conviction. And that is the real social capital we have worldwide and countrywide. So there is a time has come up for all for Sharia ulama, for the regulators, for academia, for commercial Islamic bankers to really strike hard and really provide the benefits of Islamic finance to the people who are really looking for it. We're not only meant for corporate banking, we're meant for individual, we're meant for the prosperity of the economy and for the prosperity of the world.
Thank you so much. It's good to know that you have good intentions in mind. That's a very important first step. So can we move to Mr. Zubair?
Bismillahirrahmanirrahim. Assalamu alaikum everyone. Thank you, Dr. I think pretty much the topic has been covered by the speakers before me. But there's one particular point I would specifically like to highlight. When we talk about financial inclusion, I think in the case of Islamic finance, as Arif Saab and Rizwan pointed out, that it started in Pakistan about 13, 14 years back. So it does not have a long history in terms of the Islamic banking that we are doing in Pakistan, even though it traces back to other institutions back in 80s. But formally recognition through a Islamic banking license, it started in early 2000. The point I would like to make here is, which is I think a prerequisite to Islamic finance is essentially creating the awareness. I think it is very important on the part of the Islamic banks to also continuously work in terms of creating more and more awareness, because there are studies even today in Pakistan and even for other countries where there's a question in terms of how far the Islamic finance or Islamic banking is actually recognized or people are aware about it. So I think before we actually move to the stage of financial inclusion or covering the masses, and in terms of really bringing them to the fold of financial inclusion, it is important that we also create a very strong awareness in terms of not only Islamic finance. I think generally people are aware about Islamic finance. It's essentially the products and services that Islamic banks and Islamic financial institutions are offering, and that's where I think awareness has to be created. One of the points that Arif Saab mentioned, I would also tend to agree with him, because based on our first-hand interaction with clients, people generally have a very negative perception about Islamic banking. Now that perception also has to be neutralized before we can actually make any meaningful development in terms of these clients. For example, it's very common for clients to believe that Islamic finance is very expensive in terms of when it comes to financing. Then there's also a perception, for example, that Islamic banks do not offer a very healthy profit rate on deposits. There are also perceptions related to fixed rate lending or variable rate lending, etc., etc. So my proposition would be that we also need to address the awareness part, and then also focus more on the inclusion. And in terms of financial inclusion, for example, I think there have been considerable developments. What I can share with you essentially from the DIB platform, we are also very actively involved in terms of SME financing. They've also been a model that we have worked on in terms of branchless banking booths. Now, yes, I fully take the point that Samar Saab mentioned, that our share in the overall SME financing, agriculture financing, or other areas, microfinance, etc., in the context of Islamic banks may be low, but then that has to be seen in the overall market share that Islamic banks have. So, and plus the conventional banks, the leading ones have been there in the country for the last 68, 65, 70 years. Islamic Bank has only started about like meaningfully like 10, 12 years back. So, but I think the good news is that most of the Islamic banks are fully conscious in terms of making inroads into these areas, and I'm sure going forward, definitely the contribution of Islamic banks in these areas, especially covering the financial inclusion, will definitely increase. Thank you so much.
Thank you so much. Unfortunately, I think we are running out of time, but I just want to have a very quick couple of questions. I think we have heard from the private sector, but we need to hear back some response from our State Bank colleague. I think maybe I will just one question I would like to add. I understand that there is a provision for granting licenses for Islamic microfinance banks, but I understand no one has applied for it. Could you shed the light that what is the reason that no one has so far applied for a Islamic microfinance bank, and what is the,
Yeah. Thank you, Dr. Saf. Before addressing to that question, I'll just touch upon some of the points that were mentioned over here. First of all, let me clarify it again. When I said that I argue against this motion, then my purpose was that I wanted to say that I want to have that, but actually it is not happening on the grounds. Secondly, let me also clarify here. You mentioned about financial inclusion. When I mentioned about financial inclusion, I never thought of a social service. I was talking of actual real business. When I said that financing to agriculture sector, financing to SME sector, financing to microfinance sector, and financing to the housing sector, it makes a perfect business sense. It's not a social service at all, number one. Secondly, there's a live example of success. I mean, in case of Mizan, we see that there is a substantial progress in case of housing finance by an Islamic bank because of the natural access between Islamic banking and the real asset on musharaka, diminishing musharaka basis. Secondly, yeah, you mentioned that 15 years. Now, my only fear is that a decade or 15 years, if we don't change, then sometime we become habitual of that. I don't want to have that. I mean, as a regulator, that's one of the greatest concern, that we don't become habitual of that. So, and I'm happy that people have started thinking, industries thinking about that. NPLs, you mentioned about NPL. That's very interesting point. This NPLs of huge numbers, let me say it, is a myth. The reality is something different. If you look at even SMEs where the NPLs are said to be in 20s or something like that, you'll have to look at, and we actually in the central bank are doing that analysis, that to what percentage of that NPLs pertains to the prior periods, the periods which are coming from 2000, 2001, 2, or even prior to that. And actually, if you look at financing to these real sector by Islamic banking, that exactly takes care of this high risk element, because then what you are doing is that you are sharing your risk. I totally agree with the awareness point and perception issue that these need to be improved, and apart from the banking industry side, we at the central banks are fully cognizant of that, and we are doing a number of programs. Yes, Dr. You were right that the whole enabling regulatory environment is available for setting up completely Islamic microfinance banks, but as we have seen in case of even in case of the banks, that the banks conventional banks that find it easy to move towards first setting up their windows, Islamic windows or Islamic branches, and once they see that the volumes have been generated enough, then they move from this branch mode to the full-fledged subsidiary mode or full-fledged Islamic mode. That is exactly the process that we are watching in case of microfinance banks as well. That some of the microfinance banks, they've started opening up their Islamic branches. But of course, as a regulator and as a promoter of Islamic banking in Pakistan, we very strongly support formation of Islamic microfinance banks. Thank you.
Thank you so much. So very quickly, I think we had a very good insight. We have heard from both sides, from private sector and from the regulator perspective. So just before I close, I have very quick two questions from coming back to our academia colleague. So Professor Youngbro, Bao, could you kindly, maybe you have heard them, their issues, and any piece of advice for them from your perspective?
Yes. Let the people or supporters to become as a large population to accept the risk sharing mode. That the only approach is to emphasize education. There is a proverb that the Chinese philosopher said, here I share with you. Benefit for 1 year is to plant a rice. Benefit for a decade is to plant a tree. Benefit for a century is to educate people. So people have distance to accept the idea of risk sharing in our financial system. We need to be patient, and we keep, because I believe risk sharing reflects the objectives of Sharia, maqasid al-Sharia. So I hope in future we can find all of us accept this idea. And inna Allah ma'a sabirin. Walillahi alhamdu wa tawfiq.
Thank you so much. I'm now coming back to Professor Abbas Mirakhor for his piece of advice. I know that you are quite a big advocate of use of Islam's redistributive instruments for enhancing inclusion and shared prosperity. Could you share your thoughts that how these redistributive instruments like zakat, waqf, qarde hasan, and khairat, how these can be mobilized in a country like Pakistan where the poverty levels are so, and so how could these instruments of redistribution could be mobilized, and maybe a hybrid can be created through the banks and these other instruments to provide a better inclusion for the people.
Thank you very much. Let me start with one. You asked for advice. I'm old enough to give advice, I suppose. Our problem at the root, as far as Islamic finance is concerned, at the root is this, that our bankers, our scholars, our regulators, our policymakers, they have a Muslim heart, and no other place in the world than this one. That is true. The problem is, while the heart is Muslim, the mindset is secular. Please remember that. I think if you look at the way you ask questions, the way you provide answers, the way you defend Islamic finance is all from a secular mind. And I'm not suggesting don't use scientific econometric studies. No, I'm a very strong advocate of scientific methods. But it is reversed now. In other words, it's a secular mind that tries to address the questions: is there any validity to Islamic finance? Is Islamic finance all that it's supposed to be? And then you go and start from the secular mind, you try to search for methods and methodologies from the secular world to answer the question. I'm suggesting if this mindset changes to the point where you really believe Islam is the answer and has the answer, then the methodology, the way you go to answer questions, the way you organize paradigms will change. Exactly the same scientific methods, but the way you approach it is quite a bit different. I can look around here, I know people, alhamdulillah, really good scholars, but I also see the same things in scholars as I see in bankers, in policymakers, that they really do not believe in the 21st century Islamic finance, a finance that says no interest rate can work. So how can I, in other words, you always then have to try to go around the system to try to find a way of beating that and find a way of doing Islamic without really doing what Islam's spirit tells you to do. And this is also true of fuqaha. The fuqaha too are not willing to go outside of the box of fiqh that has been passed down generation after generation. To ask a question, I'm in 21st century. There is this finance out there that can be extremely helpful to the Muslim societies. How can I use this to answer the questions of Islamic finance's problems? So that's it. So one of those methods, for example, is methods of securitization. Everybody says it's a bad way of doing it. But I tell you that there is a solution there. For example, every one of us take a trip. I mean, if you really believe in Islam and Rasul sallallahu alaihi wasallam's hadith, you will give sadaqah. So imagine if you could just go to every let's say travel agent and say that what I want to do from now on is to say everybody who travels puts, let's say, 10 rupees, 15 rupees in as sadaqah for travel. You already securitized it. I mean, that's one example. You can do that with zakat, you can do that with everything. And that organizes, mobilizes the funds for particular purposes, anything we want to do then. So these methods are available and we have to use them. But in order to use them, you have to have the mindset that sort of it becomes compatible with your heart in order to say, there is a solution, Islam has a solution, I look everywhere for that solution. We have one hadith of our Rasul sallallahu alaihi wasallam, al-hikmatu dhalla al-mu'min, that wisdom is a lost commodity for the mu'min, and he will search and find it, or she would search and find it anywhere. The whole world then, as we know, Rasul sallallahu alaihi wasallam said, is a masjid for Muslims. So is everything else that's out there created by humans, because Allah uses everything as wasila to create things in order for his kalama to become ulya. Assalamu alaikum.
Thank you so much. If I may modify your analogy that that heart is Islamic, but pocket is secular, I think. So I think we have some time for any questions. So could you please, I would suggest that please refrain from long comments. Just be asked very quick questions. Let's start with Professor Kabir Hassan. And please identify yourself.
My name is Kafil Zahri, and I'm representing Novatex Limited.
Okay.
My question is from Mr. Samir Hasnain. Sir, please, conventional banks have been offering long-term loans thanks to the SBP's long-term finance facility. But on the other side, we do not see the Islamic equivalent of the long-term loan finance facility, as SBP hasn't launched any scheme on that. So the demand is there, and there appears to be a problem on the supply side. So my question is to you that when will the Islamic equivalent of the LTFF be launched by SBP? Thank you.
I mean, I would suggest try to focus the question close to inclusion rather than more general, but I will let quick answer, but please keep your question close to linked with the topic, which is inclusion and shared prosperity.
Thank you for that question. We are fully aware of the necessity of that instrument, and actually we have done a lot of work on that, and we are actually in the final stages of its fine-tuning. So once it's approved, then it will be available. So all work has been already done on that.
Mr. Kabir, please, can we have, and then anyone on this side?
Actually, this is not a question. I just heard one of the gentlemen from the private sector, banking sector, that Islamic Bank is difficult for them to do microfinance. You can look at the example of Islamic Bank Bangladesh Limited. It is doing microfinance as part of its business model, not as an outside thing. So actually, there has been some theoretical work done by Habib Ahmed. It has been shown that through the Islamic Bank, you can reduce the cost of providing microfinance. You can use your excess liquidity as a low cost of fund. And this RDS model of Islamic Bank Bangladesh Limited, I have done a projection. It was supposed to be take over the Grameen Bank by the 2015, but because of this government for the last two times, and it's sort of slowing down, because for the last 10 years, there has not been any branch given to the Islamic banks or any new Islamic banking license. So I would request you look at this from the policymakers' perspective, and one of the reasons that you did not get any license for Islamic microfinance banking, that could be one of the reasons, because of this cost of doing business is very high. Thank you.
Thank you so much. One question, please. Anyone from this side?
Ji, Assalamu alaikum.
Please
My
identify
name is
your.
Abdullah Ghaffar. I'm from Al Barka Bank, and my question is to Mr. Samar Hasnan regarding the opening of new branch in the remote areas of Pakistan. So I've heard you before also on pointing this point. So I would like to say that since you already know that opening a branch in remote areas entail a lot of cost, not only cost in terms of establishing the branch, but in terms of retaining and attracting human resource, as well as there is an operational and control area which needs to be fortified in terms of keeping the branch running. So what measures or what incentives do you think the banks need to have? And because since banks are not opening the branches themselves, it means that the opening of branches is not that much feasible from the cost and earnings point of view. Is the State Bank considering some incentives such as maybe the reduction in SLR or CRR requirement for deposits generated from those branches?
Can I address?
Yes, please.
Quick answer to that is the reason of mentioning concentration of branches was that I wanted to show as to where the concentration of Islamic banking is. But the solution I already mentioned is in technology. You don't need to have a full-fledged branch over there. In order to have the financial inclusion, branchless banking model is one of the excellent model where without having a presence of a full-fledged branch, you can have the agent, you can have the M-wallet accounts available, so you can use that technology. So you don't need to have to establish a full-fledged branch, you can use that as long as the financial inclusion is concerned.
Well, thank you so much. Sorry, I think we have already gone above time, and I'm really thankful to all our panelists. I think it was a very, very good debate. We heard from everyone's perspective. So with that, I really appreciate and thank all the panelists. Thank you so much.
Please be seated, please. In order to distribute the mementos, I would request the volunteers to be ready. I request Mr. Riazuddin, Deputy Governor, State Bank of Pakistan, to please come on stage and do the honors of distributing the mementos. Please put your hands together for Mr. Riazuddin. First of all, I'd like to invite Dr. Abbas Mirakhor to receive his memento. Syed Samar Hasnain, Executive Director, Development Finance Group, State Bank of Pakistan. Mr. Ariful Islam, Mr. Ariful Islam, Deputy CEO and Executive Director, Mizan Bank. Now there's a friend from China, and I would like you to know him, how much we love the country China, by putting together your hands to welcome Professor Dr. Ahmad Musa Wang Yangbao. Mr. Rizwan Atta, Head of Islamic Banking, Bank Al Falah. Mr. Zubair Haider Sheikh, Head of Corporate and Investment Bank, Cash Management, Dubai Islamic Bank. Session Chair, Dr. Zamir Iqbal, Lead Financial Sector Specialist, Finance and Market Global Practice, World Bank Global Islamic Finance Development Center. I request all the participants to please assemble on stage for the group photograph. Thank you very much. Thanks a lot. We will straight away move forward to the next session, which is about the presentation of research papers. I would request Professor Dr. Sayyad Usman Al-Habshi to please come on stage as the session chair for the next session. Please put your hands together for Datuk Dr. Sayyad Usman Al-Habshi. Please welcome him. To present the paper on benchmarking Maqasid al-Sharia index and its performance in the sector OIC countries, I would invite Ala Alabad to please come on stage. It's Ala. All right. Stabilizing economic growth through risk-sharing macro instruments. I invite Sayyid On R. Rizvi to please come on stage. Ms. Iram Sabah, I will invite Ms. Iram Sabah to please come on stage to present her paper on Do Political Connections and Sharia Compliance Impact Profitability of Listed Firms, a case study of Malaysia. And Mr. Mughis Shaukat. I invite Mr. Mughis Shaukat to come on stage to present a paper on Islamic finance in the age of black swans and complexities of a multipolar world. So the stage is set for the presentation of the papers. Since we have an hour, so I think if we can have the presentations in about 12 minutes time, and we can have a 3 minutes question answer session. So over to you, Dr.
Okay, thank you very much. Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome to this session. It's by INSEAF. The whole group is from INSEAF anyway. First of all, as our brother said, you know, the time is so short, so I'll give only 12 minutes each. And if they extend beyond 12 minutes, then I will still stop them. So we first start with Allahabad. Sorry, Dr. Allahabad.
Thank you. Bismillah ar-Rahman ar-Rahim. Alhamdulillah Rabbil Alameen wa salatu wa salam ala nabiyyina Muhammadin wa ala ali baytihi tayyibin at-tahirin. Assalamu alaikum and a very good afternoon, ladies and gentlemen. It's an honor to be standing before you again, this time to present the results of our paper titled Benchmarking Maqasid al-Sharia Index and its Performance in Select OIC Countries. The paper attempts to address the challenge of transforming maqasid into measurable and quantifiable indicator. It does so by constructing a benchmark to monitor countries' compliance with maqasid in the aspects of economic, social, and policy development. So before discussing the benchmark itself and its construction, please allow me to consider first the current state of affairs around the world and in Muslim countries in particular. Widespread poverty, accumulation of debt, and the absence of morality, fairness, and justice suggests that the Western conception of development as material growth is not sufficient or comprehensive or sustainable. When it comes to Muslim countries, it is, of course, it's unfortunate to say, but Muslim countries have been lagging behind other countries in the world when it comes to economic and development indicators. These are some. For instance, we have literacy, political stability, and others. It is our belief that Islam provides a comprehensive and sustainable development model, and this could arguably be achieved through maqasid. However, there is a gap between Islam's vision and, as I mentioned just now, the current state of affairs in Muslim countries. 21 out of the world's least developed countries where unfortunately Muslim countries as of January 2014, even though some are well endowed with resources, so it can be argued that these conditions are due to the deviation from the Islamic vision for development. So turning to our Maqasid Index, since the time of Al-Juwayni, who is considered the father of Maqasid, there have been a number of conceptions put forward as being for Maqasid. So those were chosen on the basis of simplicity, imputability, and relevance with regards to the essence of Sharia. None of those scholars who have put forward different Maqasid conceptions ever claimed Hujjiyah, ever claimed independent judicial legitimacy for his conception. So that gives us flexibility of adopting a conception of Maqasid which is contemporary and which is relevant for empirical testing, and that is one put forward by Sheikh Dr. Taha Jabir Alwani. So Alwani's conception overcomes the lack of empirical content in preceding literature. What Dr. Taha Jabir Alwani did in 2001 was that he reduced the number of maqasid to 3 most essential and absolute minimum principles on the basis of inductive reasoning of the Quran. So the 3 maqasid he identified were as follows: Tawheed, self-purification, tazkiyah, and development, Umran. For those in favor of the 5 classical maqasid, it's possible to integrate them within this conception, such that Tawheed could be seen as encompassing the protection of religion, self-purification as encompassing the protection of self and intellect, and then development as encompassing the protection of progeny and property. This is just to say that this benchmark index has the flexibility of adopting any conception of maqasid which is deemed reasonable by the user. So a total of 13 maqasid indicators that you can see on the screen has been identified and mapped to those 3 different maqasid. So we have compliance with Islamic axioms and socio-economic justice, for instance, as relating to Tawheed. Self-purification has been divided into spiritual and moral uplift, equitable distribution of income and wealth, and safety and security. The other 8 indicators relate to development. So I would just like to draw your attention, please, to the fact that development in this index has been overweight. We have 60% of the weight of the entire index given to development. The reason for this is twofold. Basically, number one, it's to overcome the subjectivity of the Tawheed and self-purification aspects or components of the index, and also to indirectly measure the essentially inseparable Tawheed component through development. So a total of 62 proxies were carefully selected in order to empirically examine these indicators, these 13 indicators. However, data availability issues have limited our calculation and investigation to only 27 proxies and 37 OIC member countries. So the index is calculated as the weighted average of the subcomponents of those proxies and indicators. So this slide shows the Maqasid Benchmark Index results. Each bar represents the Maqasid Benchmark Index score. The green bar, that full green bar, is an ideal Islamic state, a hypothetical ideal Islamic state, which has been introduced into the analysis to facilitate distance-based ranking and in order to measure each country's absolute distance from the ideal state. So as we can see, of course, performance varies. We have a minimum of 33 in case of Yemen, and a maximum of 62 in the case of United Arab Emirates, so, and an average of 46 for OIC member countries in general. What this suggests is that there is indeed a gap between the current state of Muslim countries and the ideal state that would have been achieved have they prescribed to Islam prescription of development. Now, to guide reformatory initiatives, this slide shows maqasid indicators, distance to frontier. So those 13 indicators mentioned earlier, how they perform in comparison to the best frontier. So we can see again there is some differences. Some indicators have achieved relatively better performance in comparison to others. So what does this tell us? It tells us that there are aspects or indicators such as economic development and institutional quality that deserves policymakers' attention. Development in our countries could be improved with some further attention and policy initiatives directed to these indicators, for instance. However, this is to be interpreted with care, of course, because as I mentioned earlier, our proxies were limited, and therefore the distance to frontier has to also be interpreted with care. For example, the environment indicator was only possible to be calculated using the CO2 emission, which of course could be interpreted in a negative and a positive way. So all of this has to be taken into account. Now, in conclusion, there is a considerable gap again in Muslims' countries' performance today, and this could be attributed to the internalization of prescribed rules of Islam. The benchmark, the index, is intended to serve as a self-inspection tool for policymakers to monitor economic, social, and policy development within the scope of maqasid. Strengthening the worst performing indicators is, of course, important to promote maqasid consistent socio-economic development. Thank you.
Thank you very much. Thank you very much, Dr. Alabat. I don't want to waste time trying to summarize or anything. What she has done basically is just to use maqasid as a means of measuring the progress, particularly of development in Muslim countries. Right? Thank you. So we go next to Dr. Said Aoun. Yeah?
Right. Assalamu alaikum. Thank you very much, Datuk. I'm actually surprised for a last session. This is probably the biggest crowd I've ever witnessed at a conference. My presentation was originally designed as an academic discourse, but considering we have a lot of industry people, the credit goes to IBA for that, and a lot of Islamic scholars. I'll skip some of the parts, and I'll just discuss on the idea and the arguments that we have. Now, before I start, the presentation and the whole idea of this paper stems primarily, and it is inspired primarily from the works of Prof. Abbas and Prof. Zamir on the risk-sharing ideology in Islamic finance. As a background, one of the things that we have always delved and discussed in private as well as in public discourses is that Islamic banking is growing at this rate, Takaful is growing at this rate, Islamic funds are growing at this rate. But one thing which very rarely we discuss is, fine, we might reach a stage when Islamic banking is, the whole country, 100% is Islamic banking. There's no conventional insurance in the country. There are no conventional funds. Would we still be exposed to the international interest rates? This question, you can do at microstructure all 100% Islamic, but especially for OIC countries, the countries and economies would still be exposed to the interest rates because majority of the Muslim countries and actually majority of the emerging countries are heavily debt dependent. If you look at their government accounts, on an average 40 to 45%, their debt to GDP ratio is at 40 to 45%. A major chunk of it is dollar denominated. The international markets don't operate on Sharia principles. Those are all interest-bearing debts. Even the Pakistan's debt, I'm not sure it's gone over $50 billion in some recent numbers. Yes, there are a few sukuk issuances, but if you look at it, the major chunk, 90% of it is interest rate denominated debt. So even if we have 100% Islamic banking, our economies are still going to be exposed to the international interest rate markets. What's the possible solution? Prof. Abbas, in his yesterday's keynote address, had talked about some of his earlier calculations about how if we can remove the debt and finance the budgets through domestic financing. So this idea for this particular study primarily stems from some of his writings on that area, that we need to work on instruments which are not micro or which are not for purely financing, but they are designed for financing the governments. And this particular study is focusing on international markets or dollar-denominated requirements. Just a few stylized facts. We have figures of Islamic finance at 1.6 trillion, 1.8 trillion, depending on the sources we go with. There are 57 OIC member countries. 19 of those 57 OIC member countries are classified by IMF and World Bank as heavily indebted poor countries. If you look at the stats, which means their debt to GDP, and I'm talking about dollar-denominated debt, is over 80%, which is basically at an unsustainable level, and those economies are running on short-term injections by multilateral agencies and by IMF and World Bank on a daily basis. Now, in conventional finance, and over the years, a lot of studies has been done which talk about the evils of interest-based debt, and that is not in Islamic economics. It's been done in conventional economics. People have been talking about it, which Prof. Abbas highlighted yesterday as well, the evils of a debt-based economy. A major strand of literature talks about dollarization of liabilities. Now, if you look at the conventional economics, one of the basic arguments that is given is, and which Pakistan has tried as well a few times, is when your economy is in slowdown, you depreciate your exchange rate, your goods will become cheaper in the international markets, and you export your way out of a crisis. If your debt is in dollar denomination, this strategy may backfire as well, because when you depreciate your currency, your liabilities shoot up, because at the end of the day, you still have to pay back your debt in dollar denominations. So based on that, the idea came of designing an instrument which is entrenched in risk-sharing ideology and which is primarily for financing the government debt. GDP indexation or GDP linking is a phenomena or is an ideology which has been doing rounds since 1980s. People with economics background would be familiar with the name of Robert Shiller, who won the Nobel Prize in economics a few years ago. Even he has been talking about it for the past more than a decade. The whole idea is that a country's debt or a country's financing needs should be linked to their growth, which basically means that if you're growing fast in this year, you have to pay, your interest payment would be higher, and if you are in a recession, your interest payments will be lower. This gives some room to the governments to maneuver their fiscal policies in trying to revive the economy. Now, the problem is, when this idea was first floated, the first question that rose was that we're talking about GDP indexation or GDP linking, which basically ends up going back to the problem of interest rates. What we are proposing in this study primarily is musharaka-based papers. Why we are sticking with musharaka is because when you talk about risk sharing, equity or a musharaka is considered as one of the purest forms of risk sharing that is available. A musharaka is primarily a joint venture between two parties for a particular entity, for a particular project. So if the idea is, if a government issues an instrument or basically issues a claim that as the agent of the people, it says that the requirement is, let's say, $50, and they issue a paper and says that, listen, this $50 gives you entitlement onto the underlying asset or underlying business, which is the economy. If the economy grows by 5%, you pay by, the return to the investor will be 5%. And if it goes by 1%, the return to the investor is 1%. So effectively, the investor becomes a partner with the government in the economy of the country. What my paper focuses on is primarily testing it from an empirical perspective. I'm not a Sharia expert, so my focus is, before we bring it to the table, or before we present it to practitioners or the government, the first question is, the idea sounds excellent, but will it work? We have had discussions over the past 2 days. A lot of speakers have mentioned the need for empirical evidence, the need for a statistically sound evidence to show that how Islamic finance can benefit. So what we did was we took a sample of 75 developing economies, amongst which 40 are Islamic countries, which are OIC members, and the rest are non-Islamic countries. The reason for including the non-Islamic countries was to show or to basically test that this instrument, or the Islamic finances risk-sharing macro instrument, is not only for Muslims. It is applicable across the board. I will not delve into any of the econometrics or the methodology part, but I'll just go on two aspects. For any instrument to work, there are always two aspects. Is it viable for the investor? And is it viable for the issuer? There are always two parties to any financial transaction. Our results are pretty convincing at this earlier stage. So for a broader analysis, we did the analysis for the whole 75 countries as a group, because they're all developing countries. Then a question was raised that there are countries amongst developing which have the GDP per capita as low as $200, and there are countries which have GDP per capita as high as $18,000. Even if you look at it, we can't club them together. So we basically divided our sample into 5 different groups, and we ran our whole analysis again. The findings from an investor perspective, are positive primarily for most of the developing countries minus the heavily indebted poor countries. That if there's an investor who, instead of giving a loan to the government, goes for investing in a musharaka paper with the economy as the underlying asset, how much or what will be his comparative return from the actual interest return that he received. This instrument is designed for a long term, for 10, 20 years. It's a long-term investment because economies are supposed to be long-term ventures. The results are very positive that if you're investing...
Time.
Ready? Okay, just 2 more minutes. 1.5, sir, thank you. So the results were that for an investor, over a period of 10 years, the return he gets, if he's investing in the country, is actually same or slightly higher than if he had given a loan. Plus, the return is, on a risk-return profile, it's much better. The other aspect is the issuer benefit. As a country, instead of floating a bond or borrowing from IMF or Paris Club, is it beneficial for me? As a government, your biggest concern is economic stability. So we look at it at 5-year intervals, and we find that over a 5-year span, if these instruments were issued 20 years ago, today the economies would be standing at the same stage, or basically with a 5% deviation. But the economic growth is relatively more stable. So the concept of economic stability, or basically the target of government's economic stability, comes in as well. So this is primarily what this paper is looking at. It can be further expanded, it can be further refined, and as well as more robustness checks need to be done, which basically can add on to this study. Thank you very much. Sorry for the time.
Okay, let me call next Birum. Yeah, please.
Assalamu alaikum, everybody. Before starting my presentation, I would like to ask a simple question. What do you think that Sharia compliant firms should have political affiliations or no? Can you raise your hands if you say that Sharia compliant firms should have political involvement or political influence? Can you raise your hands? Oh, nobody. How do you think about a firm which is not having any political influence? So you prefer a Sharia compliant firm without having any political connections or political influence? Can you raise your hands? Majority of you, yes, you are right. So basically we have this idea in our mind that a Sharia compliant firm should not have any political involvement. But this question leads to 2 important things. Did we check this empirically? Number one. And number two, how Sharia view this point? If a Sharia compliant firm is having political connections or political benefits, then is it allowed from Sharia perspective? So the audience is wonderful because we have our very respectable Sharia scholars on the right side, and then we have academicians plus our industry experts on the left side. So my topic for today's presentation is basically, do political connections and Sharia compliance impact profitability of listed firms? A case study of Malaysia. Before moving forward, you might have this question in your mind, why Malaysia? We have chosen Malaysia. Reason behind is Malaysia is one of the leader in Islamic finance industry, and everybody is aware of that. And now the second reason why we have chosen this topic is basically the political connections do have a role when we talk about business tycoons in Malaysia. So there are some researchers already have taken care of it. They have found that yes, there are impacts of political connections when we talk about business industry in Malaysia. Now I will move forward. So this is the topic of my today's research paper. We will go through the background, the literature review, and research objective, research question, data, result, policy implication, and conclusion. Background, as I shared earlier, that we have chosen this topic particularly because Malaysia is leader in Islamic finance, yes, and at the same time, the researchers like Gomez, Jomo, Fascio, they have found that politics play a very important role in the businesses in Malaysia. What is the motivation about this topic? We want to know actually, is it possible that a Sharia compliant firm is politically connected also? Or a Sharia compliant outperform the non-compliant firm, and at the same time, a politically connected firm perform better than the non-politically connected firm, or vice versa? How this study will contribute? Understanding of the impact of political connections, and then we have Sharia compliance, and then this is the first study in which you will see a listed firm, if the listed firm is politically connected and Sharia compliant at the same time, right? Okay. For any research paper, this is very important to mention that how you are going to measure your variables. So we are going to measure our two important variables, political connections and Sharia compliance, in the following manner. The first one is political connections, the percentage of direct government equity ownership. Number two criteria, the percentage of equity owned by institutional investors. And number third is basically the informal ties a firm have with powerful politicians. The first two are easy to take, but the third one is basically we have taken from the earlier studies of Professor Dr. Jomo and Gomez. They have done a very good job in order to identify the informal connections that are not proven through their annual reports, but they know the political connections. Why? Because who is brother to whom, and why they are working over there, the board of directors and all that. So we have taken all these three criteria. Sharia compliance, very simple. We have taken the criteria given by the Securities Commission of Malaysia. So according to their criteria, if a firm is Sharia compliant, we have taken that firm as Sharia compliant. We are not arguing with the Securities Commission. We follow whatever they are saying. Yes? Yes. So moving forward, I have set the stage. Now we just directly go to the results and the research question. The question is basically to analyze and compare the performance of listed politically connected firms and Sharia compliant firm. We have two research objectives here, two research questions. The first one is, do political connections contribute to good firm performance? And secondly, does Sharia compliance adds to good firm performance or not? We have used simple pooled OLS. Profitability is measured by return on asset and return on equity. This is the equation for our paper. And then we have, this is the way how we have taken these variables. We have dummy variables, we have firm-specific variable, and at the same time we have macroeconomic variable. We got 941 listed firms from Bursa, Malaysia. Out of these 941 firms, 118 are politically connected firms and 634 are Sharia compliant firms. And the period is basically starting from 2000 to 2014. The financial data taken from data stream and the macroeconomic variable from World Bank. So this is the summary statistic, but I will quickly move to the results. So there are three models actually. The first model is basically we just added dummy variables of Sharia compliance, political connections, and 3 firm-specific variables. So what did we find actually? We found that Sharia compliance is significant and have positive impact if a firm is Sharia compliant on the profitability. Secondly, we have political connections. So when we talk about the political connections, we can see that the variable is significant, but the performance of a politically connected firm will be slightly lower than the non-connected firm. So the question might come in the mind, why is that? Because apparently the literature shows that if a firm is politically connected, then the firm should perform better. Why? Because they get benefits of being attached with the politicians, they have the lax regulations, they get insider information, they get the government contracts, so on and so forth. But our result shows the other story, that now, starting from 2000 to 2014, the firms which are politically connected, they are not performing as according to the equal level of the non-politically connected firm or much better than that. The second model, we have added the macroeconomic variable, and in the third model, we have added another dummy variable to see if a firm is Sharia compliant and politically connected, then how will be the performance? Theoretically speaking, we assume that the firm will perform much better, but the result shows that the Sharia compliant and politically connected dummy variable is not significant at all. So this is how we have 3 models, and we did the same thing not only for the ROA, but we did the same thing for ROE. So what did this result shows to us? Simply speaking, from our literature, from our empirical analysis, we found 2 things, rather 3 things. First one,
Time.
yes, Datuk, last. First one, if a firm is Sharia compliant, the profitability is better. Number 2, if a firm is politically connected, then the performance is lower as compared to the non-connected. Last but not least, we thought that a Sharia compliant and politically connected firm will outperform, but unfortunately or fortunately, the result shows that it's not the case. So what will happen with this result? The result shows that the government of Malaysia is doing very well when it comes to Sharia compliance, checking the status of the firms and ensuring the Sharia compliance over there. But we need to have a clarification. How about those firms that exist and showed the status of Sharia compliance, but in fact they are getting the political favors? Is it in line with Sharia or not? Last but not least, the role of government, 2 ways. First, we appreciate when it comes to Islamic finance, but when it comes to political connections, we need to revisit. And this study will give the awareness to all the investors who assume that a Sharia compliant firm should perform better, which is true, and sometimes they believe that if a firm is politically connected, they will perform better, which is not the case. Last but not least, how about Pakistan? Another last. For Pakistan, I just want to say one thing, that we can replicate the same thing for Pakistan. And we have to see the results. As in the case of Pakistan, it's the same, that the Sharia compliant firms outperform, and there is some political intervention, and if there is, what will be the Sharia stance on that? Does Sharia approve it or not? So empirically, plus from Sharia point of view, we can replicate the same study for Pakistan. Thank you very much.
It's very embarrassing for me because it's on Malaysia. But I know also that there are so many other countries having the same problem. So it's okay. All of us are embarrassed. there is a story, you know, when all of us have died, some will go to heaven, some will go to hell. Then those people in heaven, they wanted to find out how are those in hell enjoying themselves. So Allah says, you know, you must build a bridge from heaven to hell. And the people in hell heard rumors that people in heaven are going to peep at them. They also wanted to peep at the people in heaven. So they approached God, and God said, you also must build a bridge from hell to heaven. INSEF was called upon to do the research. And they found out that the bridge from hell came up much faster than the bridge from heaven. So and they found out also that those people in hell, there are so many contractors with political connection. So I go to Mugis.
Bismillahirrahmanirrahim. Assalamu alaikum to all of you. After these three power-packed presentations and a joke to put the icing on the cake from our Dato, I'm sure you will find out that I am a million times less brighter than my three brothers and sisters who we have just heard. Honestly, I was thinking otherwise to participate in this event, mainly because of my schedules back in Oman, and then, you know, I have a 2-week-old baby who I had to welcome. Haven't given him time properly yet. And the other thing is that I have a special biasness to my beloved country. Events happening in Pakistan always are more attracted towards me, and they appeal to me. And then to meet my colleagues, my mentors, especially Professor Dr. Abbas Mirahor, who is not only a mentor, but he's much more than that. And he and I not only share the bond of respect, but it's a bond of love, what he and I actually call as wilaya. So what you hear from me, whatever good or bad, it's yani him. If it's bad, it's mine. If it's good, it's his. So let me now, you know, take a leap from Brother On's book, and I myself am amazed to have such massive audience in the back-end sessions of the event. But this is a chance for me to get an extra ajr, because I can help you catch your missing sleep naps, because I'm very good at making people sleep with my speeches. So be ready so that I can have some ajr. What I have is just one slide. I'm not as bright as the others are. This is an evidence. Mainly I'll be discussing about something that we now will be knowing as a multipolar global economic growth regime. Ideas that has been progressing and being brought up in the age of a financial system that is bombarded by black swan events, has become a fully complex system to the order of infinity. And we will look at that within this prospects of multipolar growth regime, where China, India, Brazil, Russia, Korea are now going to become the next center of focus to be the flag bearers of the global economic growth. How can Islamic finance fit in? Because this then rings a bell for Islamic finance and sounds and announces ideal times for Islamic finance. Now, any financial system that we know of, be it the current financial system, has to mainly perform two basic functions. Number one, it has to give us legitimate and just avenues to generate income. And at the same time, much more importantly, it has to help us manage and mitigate the risks attached with earning that income. Presently, this discussion has become so much more crucial because the aspects of multipolar growth regime promises a lot of benefit for the whole world. The crux to reap those benefits would be an ideal financial architecture that enhances and assures that the benefits are reaped. The current financial system, ladies and gentlemen, as we know, and we have concluded already since years, 1400 years ago to be honest, more than that, that a system that is based on interest-bearing debt financing fails miserably to perform the basic roles. It not only disallows us to earn an extra income via legitimate and just means. But most importantly, it not only fails to mitigate the risks, it increases them. Financial risk, financial crisis is a prime example. The risks become so high that the system, managing the system, understanding the system, and then sustaining the system becomes impossible. So much so that as more the risk increases, you shift from a natural risk phase to an unnatural risk creation, so that the total risks in the system becomes so high, i.e. becoming unmanageable. This it does by its two basic survival mechanisms that it needs to thrive on is risk transfer and risk shifting, and I don't want to comment more on that because you've heard what risk transfer and risk shifting is. But ladies and gentlemen, the theory of black swans say that as much the moment risks become uncontrollable and highly classified in terms of financial jargon, in terms of muamalat that we call it in fiqh, so is the ability to understand, predict, and control the system behavior. This is an ideal time where improbable events which have high global impact are ready to happen. And as a result, over the past few years, since the last 10 years honestly, the world has witnessed the occurrence of a number of black swan events. Now in the paper, inshallah, that you will have a copy, we have listed many, but the most recent has been the Britain exiting the Eurozone. We predicted that 3 or 4 years ago. They say they give it political angles, but underneath the carpet, it has financial pressures attached to it. Pakistan is in an ideal time. It's already in the next 7 to 11 countries. The finance minister was very kind to tell us that they plan to have Pakistan in the next 3 or 4 decades, which is too long, but I imagine the potential the country has, 2 decades would be quite sufficient, as the at least 18th best economy. So with multipolarity coming in picture, Pakistan in a prime zone, CPAC is in full bloom towards its completion. What best you need is a suitable financial architecture that can help you not only become a fine, important player in the global architecture of economics and finance, but to reap the desired benefit, pull them towards yourself of multipolarity. This it can do by adopting fully to the mechanics of Islamic finance, ways and means. The paper will tell you more details, and we have done a number of studies where we have empirically shown that how Islamic financial ways and means assures a more stable and a robust economic growth. Basically, the system interlinks or relinks the financial and the real sector, where the real sector then dictates the financial sector as a whole. There is no decoupling between the two. Since there is no interest rate, the driving factor then becomes the real rate of return from the real sector that is coming in. Our Prof. Abbas shared yesterday, that the equity premium minimum in this country, my beloved Pakistan, is 20%. We've done similar calculations from where I come now, Oman, it's 25%, much more. Back of the envelope calculation I did. And we shared it with the central bank over there. We did a policy paper where we empirically proved that Oman can reap a lot of benefits given the oil crunch and the economic diversification officially adopted by the country over there. History has shown us that people who have resorted to the ways and means of Islamic finance, mainly Mudaraba Musharaka, which we now know as venture capital or Commenda from old age, has reaped a lot of benefits, so much so not only the economic growth has been more, but the societies have become anti-fragile. i.e., whenever there has been financial crisis, they have outperformed so many other entities. Silicon Valley is a prime example. Over Silicon Valley, when the rest of the world in 2008, 2009 was suffering from unemployment and devastating crisis, it was producing over 200,000 jobs. This is anti-fragility. You put more pressure, it outperforms. It performs better. Why? Because it resorts to only plain vanilla risk-sharing modes. Other examples, historical, are given in the paper, but let me give you one more example. Over the last 40 years, whatever technological advances that the world has made and that have actually transformed the world as we know it now, it has become a global matrix. If we recall the famous movie Matrix, we are living in this world now. It's a matrix now. All the technological advances, I can argue with you that there have been classic risk-sharing modes of financing. All the smartphones that we very proudly carry and keep us connected with the world, they are a product of risk-sharing finance. Complete venture capital, musharaka mudaraba, plain vanilla. No fine-tuning even. This then creates a huge opportunity for countries like Pakistan, who are now reigniting its progress in Islamic finance with the regulatory as well as federal government support, which I was very happy to hear from the finance minister yesterday. Makes me most happy looking at from the outside world. What we have done over here is that we are trying to create a next phase for Oman itself. You see, the similarity between Oman and Pakistan is, it is a last mover advantage. Pakistan is reigniting. So more or less, the countries are at a relatively similar phase of development in Islamic banking and finance. In Oman, we have now entered a second phase of Islamic finance capacity building and practice, which we now call as branding Omani Islamic finance as new age Islamic banking. Total focus would be on al-bay'a, venture capital, SMEs, crowdfunding, angel investing, which are nothing but risk-sharing Islamic modes, honestly. And then something called as igniting the stuff, amalgamating with fintech. This developments, this digitization of the financial system, which yesterday's evening session was so vehemently arguing for, is the next big thing. This is why I call the world right now, we're living in a matrix, or matrix revolutionized. As a result, resorting to the risk-sharing for Islamic financial means can be a huge opportunity for countries like Pakistan, who are now next 11, next 7 countries, restarting its journey in Islamic finance with a huge pomp and new exuberance, as well as Oman, which is just opening up to the world. We are trying to make sure that Oman gets the direction right. Policy papers are being done. I'm sure people over here can do the same in Pakistan. They are a huge talent. And it is not, our fathers who are going to do that. It is up to me and my generation to take the burden and make sure we achieve the objectives in the right way. The move I refer to as not having knowers in Islamic finance. We want believers who has the potential to become visionaries in Islamic finance. Not many, few good men. And sitting on the right places, they'll serve the purpose. So as a result, what we are talking about here is that, just 30 seconds, you can count that we are just moving into an ideal, exciting times ahead. I call it exciting times. And countries that are last movers like Oman, who has done a lot of work, mashallah, alhamdulillah, it's only 10% market share. A lot of work is being done. I'm a part of it myself. And then countries who are reigniting Islamic finance, prime opportunity to take huge advantage of the benefits multipolarity is going to offer, combine it with new age Islamic banking, focus on fintech, venture capital, classic mudarab musharaka, and we have seen countries or people who have adopted have become anti-fragile. And this country, mashallah, is blessed, created in the name of Islam, as we have yesterday heard again, huge potential. Last estimate that I want to share with you, that by 2020 estimates are that the global workforce would be from Generation X. 50% of the global workforce would be Generation X, i.e. people who are born mid-80s onward. These are tech-savvy individuals, no joking. They are sharp people, not traditional, not dinosaurs. So to have them, and in GCC alone, there will be 100,000 Islamic finance jobs. Rest assured, most of them would be filled by youth. So if our youth does not know right now the philosophies, the theoretical underpinnings of classic 101 Islamic finance, we may end up failing to have believers and then converting them into visionaries. Multipolarity of the economic world is a huge opportunity to ensure that Islamic finance is adopted, practiced, and achieved with its objective in the best manner possible. I thank you very much. Pakistan Zindabad, the nation of Pakistan, Paindabad. Assalamu alaikum.
Congratulations. I wouldn't rate any one of them. They are all my students, and I love all of them. So with that, I just close the case, and we go forward to the next event. Please join me with a very big hand for all the 4 of them.
I would request the volunteers to be ready with the souvenirs. I would request Professor Dr. Sayyid Usman Al-Habshi to please distribute the souvenirs to the participants. First of all, Ala Alabad. Sayyid On R. Rizvi. Ms. Iram Sabah. Mr. Mughis Shaukat. I'd request Mr. Riazuddin, Deputy Governor, State Bank of Pakistan, to please do the honors of giving the memento to Professor Datuk Sayyid Usman Al-Habshi. Okay, if we can assemble for a group photograph, please. Thanks a lot to all the participants for presenting the research papers. We are now moving ahead towards the final session, but before that, we'll have a quick 15 minutes tea break. We'll reassemble at 4:45 for the concluding power session.